Okay. Well, we have a question here that we want to answer specifically, and I'll try to make this clear. It's a fairly long question, but does it matter how much income I claim / make on my tax returns when it comes to getting the 1099 waiver on my primary residence? And I guess it's a two-part question. Or if I'm granted the special primary resident exception on my investment property. So basically they're trying to say, doesn't matter how much income you make, does that the exemption for the 1099 on your primary residence, you know, as a cap, if you make $1 million a year, are you allowed to get that exception on the deficiency 1099, and then also in regards to the special exception on the investment property. Can you answer that, Scott?
Yeah. As far as there's no, the good thing about debt forgiveness income is that there's no rules on income regarding that. So it has to do with whether or not, you know, it was you were insolvent, you know, were you bankrupt at the time that you know the debt was forgiven, what type of property was it, and what type of how was the loan balance used. So there's no, you can make very little money and not pay. You know, there's no really issues where income can have any bearing. The same principles that I've mentioned before, all the investment or rental property or primary residence or second home, they all apply to anybody in any income bracket. So there's no, it's not like others, some sorts of things in tax apply to certain income brackets, but not in this case for debt forgiveness. If you're solvent and you're a millionaire and you walk away from a piece of property, you're going to pay tax at whatever your going tax rate is. So there's not really, or if you made no money and you walk away from property and are insolvent, you're not going to pay any tax on it. So.
Okay. Next question here. I got 2 more questions we're going to get to here, maybe 3 if you got enough time. We got another about 6-7 minutes left here in our meeting session. And again, if you guys have not asked your questions, please get them in now, and we'll do the best to get to address those. If you don't get time enough to do it, we can take it offline. You guys can contact us by phone or through email, and we'll give you our contact information at the end of the session. Second question was, when regards to the capital gain / loss concept, how would I be affected if I already have written off my deductions on my prior year's taxes, for example, for new AC expenses or other property improvements, while I've had my investment properties? Basically, can I still use them in the capital loss formula you cover? So if someone bought the home in 2006, has been renting it out, they 1 year they got a new water heater repaired, 1 year, next year was an AC, and they deduct that you know, respectively in each of the calendar years, and let's say they got foreclosed on that property, would they be able to still use those expenses as part of the capital loss ratio?
As far as those expenses go, like I said, it does depend on what type of property and what type of expense it was. So those are something that your CPA should look at. What type of expenses they were. They may have been deducted in prior years. Traditionally, usually going forward, if it's a repair, it was taken in prior years. However, it depends upon your income. It may not have been taken in prior years. If your income is at certain levels, you may get to use those in future years when you sell the property. That is possible. Like I said, it depends on this one is a little bit more. It depends on your individual situation. But the best thing to do is keep track of what you have, anything that you've spent on it or written off on the property. And that should be on your tax return if it is a rental. And sometimes those can add, depending on what they are, they can add to the overall cost of your property. So when you dispose of it, the loss might be greater, giving you a better tax benefit. Or if you did happen to sell it as a gain, which is not common in the markets today, but if you did, it would reduce your gain. So it just kind of depends on what it is, your income level, and was it carried forward. You might be able to use it in future years if it wasn't allowed to be taken in prior years. So there's some different things that you can do you will get the benefit. Either you're going to get the benefit in the past when you wrote it off, or if you couldn't take it then because of your income levels, you might be able to take it forward. They call it a carry forward loss. You might be able to carry that forward in the future. Ultimately, that will have some impact on your tax return whenever you happen to sell the property.
And I know, guys, this is Scott knows his job very well, and it's a very involved process. So again, if you have questions in regards to some of the answers, because they're very involved, detailed answers, but that just gives you an idea of how thorough he does his job. We're going to try to keep this brief and to the point on the next two questions here if we have time. Third question is, what is the pros and cons of one strategy versus another? Is insolvency better than capital loss, etc.?
Yeah, the most positive thing that you can get as far as debt forgiveness goes is the Mortgage Forgiveness Debt Relief Act. That's regarding only on primary residences, like I said before. Doesn't apply to rentals, second homes, anything like that. Now, like I said, there is insolvency. That's probably your next most favorable thing. That can apply to, you will see that apply to investment or rental properties. That's usually the secondary strategy if it's available. Like I said, if it's a primary residence, you're going to usually see that Mortgage Forgiveness Relief Act apply. That's the most favorable. Insolvency, you can actually use both at the same time depending on the type of debt and how it was used. So that's possible. Sometimes the capital losses can come into play where you're going to take a loss but not, like I mentioned before, not pay tax on the income from the debt forgiveness. So like I said, you get a loss on your tax return, which is great, but then you don't have any tax on the forgiveness of income. So that can be very beneficial. Like I said, there's not a, bankruptcy is also a part of insolvency, but that would discharge any of your debts owed. But as far as that goes, I think that there's several different scenarios where you can use each one and applies to different types of property, what the use of the property is.
All right. Well, we will try not to venture too much, too much into legal advice on that with the bankruptcy stuff. And last question we're going to get here for the one that we're going to get to today is, what if after you do all the deductions you can, and I still owe on the 1099? What will that be taxed at? Can I get out of this or settle with the IRS?
Okay. Well, let's say if for some reason, based upon, like I said, all these are individual scenarios, on your particular scenario, you could not get out of the debt forgiveness income. So most of the time, that's not the case. But if you couldn't, how would I be taxed on that money? It'd be taxed as an ordinary income, such as just like you would receive a W-2. It'd be taxed at whatever your going income rate is, based upon whatever your income is. So think of it as like a extra W-2 type of thing. And if that came in and you didn't have money to pay the IRS that's it's not uncommon at all. You can always, the IRS will grant sometimes installment agreements with individuals where they can pay the IRS over time. Usually they will grant those, assuming that the amount owed is not extreme and the borrower can pay them back in a reasonable time period. And like I said, you can kind of request one of those. You can talk to a CPA to kind of get an idea if that would apply to you. I would say most of the time you don't see that, because if you're truly not getting taxed on this money because you're insolvent and or bankrupt, or it's your primary residence, you may not really have any money, so to speak. So if you don't have any money, chances are the reason you don't have any money is because you're insolvent, which means you wouldn't be paying tax on it. But we have seen a few cases where people do get taxed, and there are ways to not have to pay it all at once through installment agreements with the IRS.
All right. Well, guys, we're going to need to wrap it up here. We are getting to the end of our session here. We want to respect your guys' time and let you get on with your evening. To address some specific questions here, yes, we will be having future seminars. Obviously, we'll work that out. It'll be on our website at H4Hconsulting.com when the next events are being posted. Also, to let you know, this recording will be embedded and posted on our websites here, and that'll probably be a week before we get that uploaded. But we will put a link on our website, and any of these sessions that we do will be archived for future reference. And anytime you want to get in, you can go in on your own time and log in and re-listen, fast forward through whatever parts you want to and get to the questions that you have. But I want to thank everybody for their time this evening. Hopefully you found this valuable and interesting. I know it is in the weeds, it is detailed, and it's complicated. But that's why you guys need good professionals, good experts to answer your your clients or your own particular questions. I'm going to let Scott go ahead and finish with his contact information, his phone number, website, and email address.
You can contact me. My phone number. We're it's a CPA firm. We're here year round. Our phone number is 813-671-8700. 813-671-8700. My email address is scott@tampataxcpa.com, and you can reach us at our website address, www.tampataxcpa.com.
So the email address is scott@tampataxcpa.com. Okay. And again, my name is Chris Sommer, the Managing Director of Hope for Homeowners Consulting. Obviously, our website is H4H consulting.com. We set up that website to be educational, informational. Again, the link of this podcast will be posted, so you can forward to your friends at your leisure or listen to it at your convenience. And my phone number is 813-957-4900. And again, we'll be having pretty much every other Thursday, we're going to be having different experts online. I believe our next expert's going to be a foreclosure defense attorney at Christmas in Spano. That'll be on October 28th. I believe the time will be 6:30 or 7 o'clock. I have to check my own website out on that one. But we'll have a whole subject matters to cover. So each and every Thursday that I get a chance to line up some experts in the area, I'm trying to add value to those people out there and promote, obviously, professionals and businesses that can really bring an asset to your situation, such as Scott here with Tampa Tax. So, again, have a good evening. I appreciate your time, and tell your friends and family about us, and please listen at future sessions. Thank you. Bye-bye.